estimates. Plus, Musk's next payout. The Tesla CEO qualifies for $2.1 billion as the company's average market value reaches a new milestone. The big test for shares comes today as the electric car maker reports. Matt.
Let's take a look at futures right now. We have losses, although slight, across European equity indexes. All arrows are red, but only about 0.2% at the worst here. Let's see as equity indexes start to trade live with the global macro mover screen. Looks like you're going to see a lot of gray here, because when you don't see much direction in one way or the other, you don't see the bricks light up red or green. The equity index column, of course, is on the far left there, and you can see the IBEX opens up down 0.4%, but the FTSE is literally unchanged. The DAX is unchanged as well right now. The CAC is down 0.1%, so there's not a lot of movement, but what movement we do see here is to the downside this morning. The euro, I think the more interesting story, strengthening to an 18-month high after the European Union leaders reached a deal for a 750 billion euro stimulus package. Joining us now is John Rowe, Legal and General Investment Management, head of multi-asset funds. John, let me first ask you about the package, the recovery package yesterday that's driven the common currency to a relatively high level. And a lot of people are saying this could be a safe haven now. We could see the euro appreciate to levels in the 120s or even 130. What do you think?
There's definitely a lot of positivity around the euro. I think when you look at what people are saying, there's a very positive view. So if anything, actually, that probably makes us a bit more nervous on it going forwards, is that so many people are positive. You're starting to hear people talk about, 125 and those kinds of numbers. And that's still quite some way off. And it feels a bit like so much positivity building behind it that people are getting behind the trend. But actually, for us, that can be a bit of a warning sign, just because that can often lead to disappointment because there's so much expectation already built in. I think what's most important about the package is that we've talked about before that you can't have monetary union without fiscal union. At some point, either the monetary union breaks or you get a closer fiscal union. And this is very much a step towards a form of fiscal union with these large payouts to a wide range of countries, coming predominantly from Germany, given the size of the rebates to the frugal four.
Interesting, John, and you mentioned there how there are just so many people in the market with that view. What about herd mentality around tech stocks? We see the NASDAQ up by 19% now year to date. There was a lot of expectation going into this earnings season, and you've been long of tech. Are you still, and do you still like that sector?
Yeah, we're still long, and the fundamentals are very strong, and actually we don't think the sentiment is as stretched as you might hear. So one of the things that came out last week was one survey had it as the longest long of all time in the Bank of America survey. But actually, when you look at volatility or option skew, which are kind of live market pricing ways of looking at it, neither looks particularly extended. When we also look at retail, which have clearly played a role in the rally in the US, actually the retail purchases don't appear to be concentrated in tech, with companies like GE and American Airlines featuring heavily in some of the most frequent purchases. What I would say is that we're getting a little bit nervous about the top quartile of individual companies within the NASDAQ. So that top quartile have gone from a forward PE of around 30 to 35, which is where they've been for the last 3 or 4 years, up to around 50 times. And the rest of it, the three quarters looks quite well behaved on a forward PE basis, but that top quartile has made quite a jump in the last couple of months.
Yeah, so is it way overvalued? Do you expect it to come down? And what could be the catalyst, John?
No, so I don't think in aggregate it's overvalued, but we are going to keep a closer eye on this top quartile now. So in aggregate, actually, they performed in line with improving forward earnings, which reflects faster tech adoption. So they don't look particularly stretched on a valuation basis, but there is this subsector of about a quarter that we are going to be paying closer attention to. In terms of the catalyst, there are high growth expectations, particularly for that top quartile of price earning ratios, so anything above 50, for example, and it'll be as they report, and if we don't see the growth come through and we get a bit of a disappointment, we don't get a constantly higher rate of tech adoption, then that would be a catalyst for a more serious pullback. And that's the biggest thing we're keeping an eye on. But actually, generally, the kind of the outperformance have been reflecting the earnings improvements rather than a big re-rating.
More broadly, looking at stocks then, John, what kind of assumptions do you think investors are making about fiscal stimulus in the United States? We see that stalling in the process in Washington. Do you think the market is assuming that something else is coming?
Yeah, absolutely. I think the market expectation here is above 90%, and it's very much this is almost a done deal, and all of the talk is around the size of the package, with around $1.5 trillion being the average. And actually, I would say that people's expectations, ours included, are that the risk to that are to the upside, because nobody wants to disappoint, particularly in an election year. So for that reason, you're probably looking at $1.5 to $2 trillion, and that does very much set the market up for a very serious disappointment if it wasn't to go through. And even that delay that leads to a period of uncertainty for all those Americans that are on the $600 a week additional employment benefit, that would be a very difficult position. So yes, if this actually does lead on and we get to the end of July without a deal, I do think that would be cause serious market jitters. Now, within that, the way we're starting to play it is actually to reduce US investment grade credit, because that's rallied all the way back to around 30 basis points higher than the start of the year, which isn't really very much at all. And so that's got a real asymmetry in it, where you're not going to get a lot more upside, even if it does go through. But if for any reason we do get problems, then actually that could cause a lurch back in spreads to be considerably wider. So rather than in equities, where you could still see a lot of upside for different reasons, like lots of Americans start wearing masks, if we see that will lead to lower infection rates in those key US states. And if we see that would be a big positive for equities, whereas in the credit, it does feel quite a lot more asymmetric within investment grade.
All right, fascinating stuff, John. We're going to keep you with us. John Rowe is the Legal and General Investment Management Head of Multi-Asset Funds. He says if markets see more people wearing masks in the U.S., that will lead to a positive pricing. Pressuring pause or pressing the pause button on stimulus may be a problem. John pointed that out as well. Could a spat over payroll taxes delay the next tranche of U.S. aid? And by the way, size matters here. We'll discuss next. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are 10 minutes into the trading session right now and not seeing really a lot of movement, although what we do see is to the downside. The FTSE and the CAC both off about 0.2%. The DAX in Frankfurt is unchanged. Let's get the Bloomberg Business Flash right now. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. More than 200,000 Brazilians are asking British judges for the right to sue BHP, the world's biggest mining company. That's over the collapse of a dam 5 years ago that killed 19 and caused lasting environmental damage. If judges let the case go ahead, it would be the biggest class action in UK history. Tesla chief Elon Musk has unlocked the second chunk of his Moonshoot Pay award. The company's stock price has hit another target, meaning he can access stock options potentially worth $2.1 billion. Musk unlocked the first tranche of the award in May. Tesla's market value has more than doubled since then. Today, the Royal Bank of Scotland is due to become NatWest Group, ending 3 centuries under the old name. But RBS will remain in use as a brand for its Scottish consumer business. Chief Executive Alison Rose says the move is to align the bank's name with the brand under which most of its business is done. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura Wright here in London with your Business Flash. Now let's talk about credit markets. The cost of protecting against defaults by European companies fell to the lowest in almost 5 months after EU leaders agreed on their €750 billion recovery fund. Let's speak to John Rowe, Legal and General Investment Management's head of multi-asset funds. What are your thoughts on credit at this point? I was talking there just about European credit and about CDS spreads coming down in the wake of the recovery fund being approved by European governments. But I know that you're generally negative on credit. Which parts?
So we've been particularly focused on the US, and that's because when you look at credit spreads in the US, they've come down about as far as on the European index, but actually the duration of the US index is a lot longer, 3 to 4 years longer. So all else equal, European credit spreads should be tighter than US just because the term of the debt is shorter. So for that reason, we focus particularly on the US. We just think it's come so far so quickly. So in US credit's case, spreads got as wide as sort of 350 basis points in March, and now they're back down to around 130. And that's just getting to the point where you're getting that real asymmetry into the potential profile of returns. So that's led us to downgrade credit, investment grade credit generally, and at the same time to focus that most on the US because of that really, really strong movement. I think the idea is that because the Fed is buying corporate debt, that will maintain spreads at tight levels, and that's fair, but actually it won't stop insolvency. So ultimately the risk of companies going bust still remains. And so against that backdrop, we think it's gone too far, too fast. We're more positive on, for example, emerging market debt, which has had a much more gradual and less complete recovery. So there's probably still further to go there. But within investment grade, we're now negative.
What do you think about issuance? I mean, we had a story on the Bloomberg yesterday saying there's still about $1 trillion of sovereign debt coming to the market in the months ahead that is going to need buyers because central banks outside of Europe just aren't pulling the trigger on enough of it. Is issuance an issue with corporate debt as well? I mean, is there going to be a ton of it coming?
Yeah, providing we keep US all-in yields on US credit now are below 2%. And so this is an extremely attractive time for corporates to continue to raise. We've had very high levels of issuance, and we'd expect that to continue. Somewhat of a lull inevitably during the summer, but then that picking up further in September and forwards, because it's just such a cheap time to actually to raise money. The same true in sovereign to some degree. What we've seen in previous bouts of QE and big programs is a big tightening when they're announced, and then actually less positive ongoing price action as it kind of ekes out. So very much we're now getting to levels within, for example, peripheral European spreads where we find them less attractive, and instead we're looking a little further afield to try and find stories that are a little bit more idiosyncratic. So, for example, within Europe, Croatia, which has a particular additional catalyst as it goes down the path to joining the euro. But the more traditional peripheral European countries are getting back to levels where they no longer look attractive for us.
What about inflation expectations then, John? I'm just looking at a chart of US break-evens for over 5 years and 10 years and 2 years. And they do seem to, well, they've been ticking up since March, but just back to levels that we saw them at previously, or not quite. What are your expectations around inflation?
So there's still a big gap between forward break-evens, so five-year break-evens, and the Fed's target, and that gap is nearly 1%. So on the one side, you can see there's a strong valuation case, but what we have kind of had to bear in mind is that the co-behavior of inflation markets and equities has become higher. So they behave more and more like an equity proxy, the inflation markets. And for us, that does make them less attractive because it's no longer diversifying or hedging a risk for us. It's more just adding to the equity beta that we already have in portfolios. So we've actually been, as we've had this rally happening, we went in with quite a lot of inflation exposure in March, but then we've been actually starting to reduce that now as we hit levels where we think it'll get harder and harder for it to continue to rise going forwards, particularly because even in a good US scenario, you don't get GDP back to end 2019 levels until the middle of 2021. So that is quite a shock to supply and demand. That'll tend to be deflationary. And so against that backdrop, we are moving away from inflation markets, particularly because of this relationship with equities that's playing out.
All right, John, thanks very much for your time today. It's been informative and fascinating stuff. John Rowe, Legal and General Investment Management, head of multi-asset funds, talking to us about, well, there's so much going on today, covering really the gamut. He's going to continue the conversation with Anna and myself on Bloomberg Radio in just about 45 minutes. So at 9 a.m. UK time, 10 a.m. on the continent. You can tune into that in London on DAB Digital. Anywhere else in the world, just type in Bloomberg Radio on your search, on your Google or whatever, and you can find it. Also, apparently, radioplayer.co.uk is one of about 1 billion ways to tune into Bloomberg Radio. Coming up, Adevinta wins the auction for eBay's classifieds unit. I'm sure I'm saying the name wrong, but it's one that you will be learning quickly. The Norwegian digital marketplace owner jumped 39% in trading yesterday, fighting off the likes of Prosus and Blackstone to seal a $9 billion deal. We'll speak to the company's CEO next. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open right now, 20 minutes into the session. We don't see a heck of a lot of movement in terms of the equity indexes, but there's a lot going on in individual stocks this morning, and there certainly was a lot yesterday for Adevinta. eBay is selling its online classifieds business to the Norwegian company for over $9 billion. Adevinta beat out the likes of Prosus and a private equity consortium that included Blackstone to win that auction, making it the world's biggest player in the digital marketplaces sector. And Adevinta is already looking ahead to its next deal. Joining us now is Rolf Erik Ryssdal, the CEO. Rolf, talk to me first of all about what you think you can do with this classifieds unit. If eBay didn't want it, how can you make it work?
I think eBay wants it, and that's why they're staying on as a very big shareholder. And we're truly excited about this because together with eBay, we're now creating the world's leading online classifieds platform. You know, it's going to be a highly diversified and profitable company, and we also see significant synergy opportunities here.
Rolf, good morning. It's Anna here in London. What kind of shareholder do you expect eBay to be? Because this could be quite different, quite new for your business.
Well, you know, eBay is a fantastic company. They are experts in marketplaces and have been that for many years. So we're truly excited to continue to work with them, and I'd like to explore more opportunities to work closer with them. And eBay Classifieds Group has been the largest international, one of the largest international classifieds companies, and together we're creating this #1 player internationally, so we're very excited about that.
I'd say, you know, during the lockdown period, I've been using things like eBay Classifieds a lot more than I had in the past. How sticky, because I'm sure a lot of other people have been as well. Rolf, how sticky do you think that is? Will we continue to be, you know, doing our consumption, doing our shopping this way?
Yes, I'm convinced that that is what you're going to see. And I think the COVID-19 is accelerating digital behaviors tremendously. So, you know, what previously could take a couple of years for people to get used to the digital, new digital opportunities is now happening within a couple of months. And the thing is, once behaviors change, they tend to change in a permanent manner. So what we're seeing on a lot of our sites is increased activity, and people want to transact digitally. They want to have digital journeys. And what I'd like to say that the yardstick for us here is not only other classifieds companies, but it's also you know, the e-commerce giants. People like to do one click and then transact. So what we're offering in many of our countries is that you're actually able to sit in one place and transact with someone in a complete different place, and we'll take care of the whole transaction.
When I buy something online, Rolf, I didn't know I was setting off on a digital journey, but maybe that's what I'm doing. The UK certainly has plenty of online marketplaces, and you've said you want to do further M&A in this sector. It covers a whole host of different industry groups, though, from housing listings to insurance to all kinds of different sectors. Are there sectors of the economy that you would target in this M&A that you still have planned?
Well, first of all, I'd like to say that first we're going to close this deal, which we expect will happen in Q1 next year, and then we're going to do integration. But I've said that further down the road, of course, further M&A is also interesting. And I think the main things that we're looking for in classifieds are either real estate, autos, jobs, or what we call horizontal, that's buying and selling of small things.
Rolf, one thing I find interesting, whenever we see sites doing well and gaining market share in the U.S. or Europe, in the Western world, basically, there's an Asian clone that gets even bigger than the original Western site. Do you think you can get into Asia, for example, India, and build something big there for a Western company, or do you have to always compete with your Asian rivals?
Well, I think that the Western markets is very large and creates a lot of opportunities for us. That's where we'll concentrate our efforts, now, and to get this deal in place and to integrate. So I think that'll be our focus, the Western world, and then who knows, at a later stage, perhaps we may pursue opportunities there.
Rolf, really good to speak to you. Rolf Erik Rysdahl, the CEO of Adevinta, certainly a business that we hope to talk to again in the future when some of these other M&A plans come to fruition. Thanks very much, Rolf, for joining us today. Really significant deal for its size, certainly in the Norwegian market. Up next, Pompeo's praise. The US Secretary of State shares warm words about Britain's tougher stance on China. We will speak to UK Defence Select Committee Chair Tobias Ellwood. That is next. This is Bloomberg.
Welcome back to the European Open. We are 30 minutes into the trading day right now and looking at equity indexes that aren't really moving too much. At the same time, we're getting some breaking lines out of Houston. We have a problem. The U.S. has asked China to leave there, and China is now leaving there. So this is in terms of a consulate in Houston, Texas. China is leaving after the U.S. asked it to. Interesting story that we're going to get more detail on. Let's get the Bloomberg First Word News right now. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Well, following up on China, the US is charging 2 Chinese hackers with stealing or trying to steal terabytes of data, including coronavirus research. The Justice Department says the information taken was worth hundreds of millions of dollars, adding the 2 men were assisted by Chinese officials. Recovering from a mild case of COVID-19 may not offer much lasting protection. New analysis of 34 patients that did not need intensive care points to antibody levels falling quickly. The research is fueling concerns over the durability of a vaccine and the idea of reaching so-called herd immunity. Judy Shelton is one step closer to joining the Federal Reserve's board. The president's contentious pick cleared a key hurdle, winning approval of the Senate Banking Committee in a party-line vote. The panel also voted in favor of nominee Christopher Waller, who passed with a clearer margin. The nominations now go to the full Senate committee for confirmation. Global News, 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Matt, Anna.
Laura, thanks very much. Laura Wright here in London. Now, Britain and the US are in talks over a coalition to resist China. Secretary of State Mike Pompeo praised the UK's tougher stance against Beijing after meeting with Foreign Secretary Dominic Raab in London. That comes after Britain banned Huawei from its 5G wireless networks and suspended its extradition treaty with Hong Kong following China's new security law. Plenty then to discuss with Tobias Ellwood MP, UK Conservative Member of Parliament, former Defence Minister and currently Chair of the Defence Select Committee. A lot of topics then to cover with you, Tobias. Good to speak to you. Let me ask you about this seeming intention to form a coalition that takes on China. The UK and the US seem to be part of this. Do you think you'll get others to join that mission?
I think we have to. I think for so long, the world has hoped that China would mature into a global responsible citizen, that it was communist in name only. And clearly that hasn't been the case. They've taken advantage perhaps of the limitations of our world order to further their own power base. And we turn a blind eye to their human rights abuses and their democratic deficit. But clearly now what we're seeing in Hong Kong, with also the suppression of the news of the pandemic, people are looking at China very, very differently indeed and saying, is it now time to stand up to this country that is indebting countries, so many countries across the world, in its debt trap diplomacy, through its infrastructure programs, its technological deals as well. And this challenges the West and what we stand for. But ultimately, we've done nothing about it. So is this the moment that the United States, Britain, and indeed other countries starts to be a little bit more robust in what we believe in and what we stand up for?
Are there privacy concerns when it comes to, issues beyond Huawei? I mean, for example, TikTok is a digital service used by probably millions of UK teens and tweens, and it's possible, or there have been accusations, I should say, allegations, that that data isn't necessarily secure and possibly shared with the Chinese state. Are you concerned about TikTok?
I certainly am, but what I don't want to see is like individual tactical chess moves of us responding one by one to what China does, whether it be their nuclear infrastructure involvement here in the UK or Huawei or TikTok. We need a full foreign policy reset. We need to understand that we are heading towards a bipolar world. I'd go so far as to say that we're probably already in a Cold War, but we're in denial. There is a geopolitical threat that challenges the West and what we do, the way we do our business. And we need to stand up and offer a graceful solution to take us away from this clash that we're now experiencing. We're going to see Russia and China move more together. We're going to see the West at the moment where we're partly to blame because we've been so, I think, weak and divisive. We've not been collectively more forthright in what we stand for. There's been division right across the world, compounded because of the pandemic, countries retreating from global exposure and so forth. So this is the moment to really stand up and say the Westphalian rules, the Bretton Woods organizations that served us well after the Second World War, they need to be reset.
Okay, so those those commitments may be important, Tobias, and essentially easy to say, but what does that mean for Chinese money wanting to find its way into the UK? I'm thinking in particular about the nuclear industry. Hinkley C, is that now at risk? And when we look at Sizewell and Bradwell, do we look to put limits on Chinese involvement there as well?
And that is the fundamental question. How do we manage a country that we've all become so reliant because of its growing economy? I recall David Cameron, George Osborne going out to China, wooing China. And this is the problem, is that we've almost become fearful of China because its economic power. But in fact, that's its Achilles heel. You know, it's not abiding by WTO rules. It's pushing its own agenda. It exploits the fact that other countries aren't united together and standing up to it. So we need to be more determined and more forthright to say, these are our rules and you must abide by them. It is wrong to spy on your own people with this technology. It is wrong to entrap people into debt in the way you've done so. And if there are consequences economically to our trade, then so be it.
And so what does that mean, though, Tobias, in terms of, does that mean no Chinese money in UK nuclear power?
It doesn't. It means that you're more than welcome to invest in the West, but under the agreed international rules. What we can't have is a situation whereby we choose not to include Huawei, for example, and then China threatens funding to Manchester University. That shows that this isn't just an independent commercial operation, but an extension of the state. And the fact that Huawei is so big in the first place, that's because it's received $60 billion over the last 10 years. We can't compete with that in the West. That's why China is able to advance in the way that it's done so. But it's more to do with the geopolitical authoritarian ideology that it is promoting, which challenges the West. And that's why I would say that this is another era of Cold War that we need to wake up to. Currently, we continue to be in denial. We're still hoping that China is going to join the international community and be more like us. It is not, and we need to recognize that.
Are you concerned, though, about provocation here? Because we have a developing story right now in Houston where, you know, firefighters apparently accused the Chinese of burning things or said papers were being burned outside in open containers. Then, according to the Chinese Foreign Ministry, the U.S. demanded that the Chinese leave their consulate there. Now the Chinese have closed the consulate. Again, this is a developing story. It's happening right now. But we're seeing consequences of these headlines crossing the Bloomberg. For example, the UN is erasing gains in markets. And these things can pick up and get out of control very quickly. Are you concerned about that kind of provocation?
I am. I mean, you mentioned the UN as well. I mean, this is another, I'm afraid, angle of the Chinese approach is actually to neutralize the very international architecture that holds countries to account. We were trying to, do some good in Syria to provide some aid to the refugees there, and it was vetoed by China. And WTO as well, that the trade organization is unable to do its work because the Chinese are able to stop anything happening. So this is, again, another angle of Chinese agenda here that we need to address. There's a difficult conversation that the world needs to have. And at the moment, as I say, most people are still in denial.
Yeah, we see other headlines crossing the Bloomberg just at this moment, Tobias. China vowing to respond if the US doesn't withdraw its consulate action. Tobias Ellwood, thank you very much for joining us. Tobias Ellwood, UK Conservative Member of Parliament and former Defence Minister. Interesting to get his take on the UK-China relationship, but also as we see tensions escalating, hitting markets between China and the US. Those developments in Houston very much front of our minds. Matt.
All right, coming up, the Spanish government says it'll receive 140 billion euros from the EU aid package. And up next, we're going to speak to the Spanish Foreign Affairs Minister, Arantxa González Laya. She also recently spoke with Mike Pompeo and has a thing or two to say as well about the digital tax. So a wide range of issues we'll cover with her. This is Bloomberg.
Welcome back to European Market Open. European equity markets retreating now, down 0.7%. US equity futures also in retreat, down a couple of tenths of a percent. And part of that is to do with the breaking news story that we're covering here. The Chinese saying that the US ordered them abruptly to close their Houston consulate. The US made this order, and the Chinese are calling this an unprecedented escalation. This is all according to the Foreign Ministry in China. The move was unilaterally initiated by the US, according to China, and they were given 72 hours to close the consulate in Houston. The Chinese asking the US to reverse this decision, and we've seen videos posted online by local media outlets in Houston which suggest there have been fires in containers outside the consulate building. So all of this gaining momentum and markets clearly watching. Matt?
Let's get the Bloomberg Business Flash now. These are today's top corporate stories from the Bloomberg terminal. Philips has reached out to Chinese rivals to gauge interest for its home appliance unit. Sources tell Bloomberg the deal could fetch as much as $4 billion. A formal sale process could start in the fourth quarter. Buyout firms like Blackstone, CVC, and KKR are also expected to look at the business. No official word yet. More than 200,000 Brazilians are asking British judges for the right to sue BHP, the world's biggest mining company. That's over the collapse of a dam 5 years ago that killed 19 people and caused lasting environmental damage. If judges let the case go ahead, it would be the biggest class action in UK history. An aluminum producer, Norsk Hydro, posted an unexpected loss in the second quarter. That's as a sharp slump in demand forced it to take a $200 million write-down. The company says it's taking measures to protect liquidity and adjust production capacity. It's also freezing some planned capital spending for this year. And that is your Bloomberg Business Flash. Anna?
Matt, let's just get a quick look at where we are on these markets then as we watch these escalating tensions between the US and China. We see the Chinese currency is on the move as a result, and we see stocks here in Europe and futures in the US also sliding. So stock 600 here in Europe now down 0.8%. Pulling up the GRR function to check where we are from a sector perspective, and all of the sectors in Europe are now in negative territory. Telecoms providing a little bit of support perhaps, or almost, but elsewhere we are weaker. Autos and parts weighed down by numbers through from Valeo. Travel and leisure also trades to the downside. Coming up, we're going to be talking about the Spanish, or we're going to be getting some Spanish reaction to the bailout deal that has been put together by European leaders this week. We'll also talk about Tesla and numbers due out later. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We see equity indexes moving lower, as well as the Chinese currency after we started reporting this developing story. The U.S. abruptly ordered China to close its consulate in Houston in what the Chinese foreign ministry is calling an unprecedented escalation. The move was unilaterally initiated by the U.S., according to the Chinese, and Chinese officials in the U.S. say they've received bomb and death threats in the past. They will now close the consulate in response to the U.S. asking them to leave their Houston location. Apparently, the U.S. gave China 72 hours, or at least that's according to Hu Jin, the editor of the Communist Party's Global Times newsletter. Since then, China has demanded that the U.S. immediately withdraw this Houston consulate decision, and China has vowed to respond if the U.S. doesn't withdraw the consulate action. So it looks like things are escalating here, and you can see it in the drop in the yuan, the U.S. dollar here gaining ground against the yuan, but really gaining ground against a lot of currencies. If you look at the dollar index, you'll see a spike, Anna, there as well. If you look at treasuries, you'll see a big drop in yields as investors crowd in to the space there. And gold, of course, already trading fairly high at 1853. So safe haven assets are getting a bid on this news.
Yeah, indeed. We're watching what's going on with the yuan. We're certainly seeing some movement there. 6.9978 is where it currently trades on the offshore. So we're watching that very closely around that 7 level. So we'll keep an eye on that. And stocks certainly turning more risk off as we move through this session in response to those lines coming through from China. Now, Tesla has added more than $100 billion in market value since late June. Now the surge in shares faces a major test this afternoon when the company reports financial results. Let's bring into the conversation, here to walk us through what we can expect, Alex Webb, our Bloomberg opinion columnist, who's with us this morning. Alex, good to speak to you then. So can Tesla deliver and sustain the share price momentum? Because momentum it certainly has had.
I mean, it certainly could. Ultimately, it needs to deliver a profit this quarter in order to get its fourth consecutive quarter of profitability, which will allow it to be added to the S&P 500 index. Now, that would, of course, confer an advantage because it means that index funds would be investing in it. Now, there have been a lot of retail investors, particularly, who it seems have invested in the stock in the anticipation of it being admitted into the S&P 500. I think, ultimately the trajectory of the share price, it isn't necessarily tied to anything particularly rational. So whether that trajectory is continued were it to be admitted is an entirely different question, and one which I think is almost impossible to answer. But analysts are predicting, some of them say that it could make a profit this quarter, others say it couldn't. I think if the average is actually expecting a loss, which suggests it wouldn't happen, but there is leeway for it to be the case.
It's great to be skeptical. It's, I think, it's kind of a journalist's job to be skeptical, and we have definitely been doing our job with Tesla. The skepticism has, Alex, been palpable for the last decade, and yet the company is now worth more than Toyota, Volkswagen, and Hyundai combined. The market cap is up to $291 billion. And this is making Elon Musk, despite the skepticism, a very wealthy man, isn't it?
It is, yeah. He is now, he has a series of targets whereby if the market cap averages, for example, in the most recent round, more than 150 billion over a 6-month period, he's entitled to a 2.1 billion set of options. They don't invest fully for another 5 years, but he can he's got the option of a further 50 billion over the next few years. Now, of course, those are all tied to the stock, and the stock continuing to rise. By the same token, if the stock rises and then falls, in the next 5 years, it is worth nowhere near 50 billion. So, he is becoming significantly wealthier for now, at least.
Let me move on and talk about some other things to do with technology, Alex, that are on our radar. What are investors looking for with the Microsoft numbers that are due out later on today? Because there's been such expectation around this sector, and now a lot of people looking to see whether the numbers will really justify the expectation.
The thing that I think a lot of attention is going to be on the cloud. People are working from home. That's changing the way that clearly their offices are set up, and actually places greater emphasis on the cloud. Now, whether Microsoft is going to up investment in its cloud capabilities because it expects the work from home trend to continue post-lockdown, is an interesting sort of bellwether. So we'll see, I think, attention on firstly existing cloud growth, expectations for the cloud, but then the pace of investment, the pace of capital spending, which will be a good indicator not only of that work from home trend, but also would augur well for the likes of Intel, who make the server chips which go into those cloud operations.
Thank you very much, Alex. Alex Wegg, our Bloomberg opinion columnist. Thank you very much for joining us on the subject of Tesla and indeed on broader tech. Just to recap some of the lines we've been seeing coming through from Houston, really, the Chinese saying that the US asked them to shut the consulate there. The Chinese are clearly very angry about this, calling it an unprecedented escalation. According to the Chinese, they were given 72 hours to close the consulate in Houston. That is according to the editor of the Communist Party's Global Times newspaper. We have also heard lines from the Foreign Ministry calling on the US to change course and to make a different decision here. And of course, we are without that US response just now because many people in the US understandably are asleep right now, Matt. But markets, as we wait for US response, markets react.
I hope they're asleep. It's early in the U.S. In any case, if they're not, we really see, they will really see risk havens jumping. The Bloomberg Dollar Index soars up, especially against the pound right now, 126.83 the level there. Euro gaining against the pound as well. This is Bloomberg.
It'll have to wait. The word from U.S. Congress is that the next tranche of stimulus may not come until August. Republicans back stimulus checks, but a payroll tax cut is in question. Metals shine, silver jumps to the highest in almost 7 years. Gold rises towards a record amid uncertainty over the recovery. And Elon Musk's payday, the Tesla boss nails a $2.1 billion award as the car maker's market value reaches a milestone. The company reports earnings today. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacroix here in London. Now, we do have breaking news over the last 20 minutes or so. China says that the U.S. has abruptly closed its consulate in Houston, and that's having an impact on the market. So let's get the markets up. Risk sentiment actually looks a lot shakier after China said the U.S. abruptly ordered the closure of its consulate. They call it an unprecedented escalation. Most European indices have extended declines to actually session lows. S&P futures are also accelerating their descent. And then I did want to show you gold and silver. Euro dollar you can see at 115.18. And now let's get straight to the Bloomberg First Word News here in London is Laura Wright. Hi, Laura.
Hi, Francine. President Donald Trump is rebooting his virus briefings. Notably, the press conference also saw a shift in tone, with the president urging Americans to wear masks and avoid risky behavior. The official U.S. death toll for the virus has topped 140,000. Cases are still growing, particularly in southern and western states.
It will probably, unfortunately, get worse before it gets better. Something I don't like saying about things, but that's the way it is. We are imploring young Americans to avoid packed bars and other crowded indoor gatherings. Be safe and be smart.
Recovering from a mild case of COVID-19 may not offer much lasting protection. New analysis of 34 patients that did not need intensive care points to antibody levels falling quickly. The research is fueling concerns over the durability of a vaccine and the idea of reaching so-called herd immunity. Congresswoman Alexandra Ocasio-Cortez wants an apology from another lawmaker after a confrontation on the Capitol steps. Ocasio-Cortez says Republican Ted Yoho of Florida accosted her, put his finger in her face, and called her disgusting. She says Yoho was upset about remarks she had made about crime in New York City. Yoho says he doesn't want to talk about it. Global news, 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Thank you so much, Laura. Now, China says the U.S. has ordered the abrupt closure of its consulate in Houston, Texas. A government spokesman in Beijing calling it an unprecedented escalation. And according to the editor of the Communist Party's Global Times newspaper, the U.S. gave China only 72 hours to comply. Now, the news comes after local reports of papers being burned outside the building. Joining us now is our editor, Derek Wallbank. Derek, it's unclear exactly why the U.S. asked China to close it down so quickly, and it's also unclear why there are now fires inside. What do you know?
That's right, Francine. It has not come out yet. We haven't heard from the U.S. side as to why they ordered China to get out of its consulate in Houston later on this week. I expect that as the U.S. day comes around, we'll get some clarity on that. Keeping in mind there have been a number of things that the U.S. has objected to from China recently, including a recent report that there had been some sort of economic espionage targeted at virus remedies, but it's really way too early to say exactly what the trigger point for this was, or if this was something that had been percolating for a long time. What we do know is that around 8 p.m. local time, neighbors and witnesses near the consulate in Houston, Texas, reported seeing smoke coming from near that facility. It was discovered that there were paper fires in containers outside of the buildings at that that consulate compound. Houston police responded. They were reportedly, according to local media, not able to access the area. And that sparked a lot of questions as to what was going on there. It's not usual to see fires at a consulate outside. It sparked some speculation. And then we just saw, as you said, within the last half hour, China announced that the U.S. had demanded that it leave by later this week.
Will China retaliate? How quickly can things escalate from now?
China has gone on record and said that if the U.S. does not reverse its erroneous decision, they would respond in some kind. They have not detailed what a response like that would do, but the phrase that they used is, otherwise China will make, quote, legitimate and necessary reactions. So we'll see what those wind up being. Obviously, you know, the U.S. and China have had a number of complaints against each other in the last weeks, last months, last years. This is definitely escalating tensions. You can definitely see this in the market reaction.
Yeah, risk sentiment looks even shakier after China said the U.S. abruptly ordered the closure of its consulate in Houston. Thank you so much, Derek Wellbank. Of course, Derek will be across that story throughout the day, and we'll get to Derek again very shortly. Now, coming up, we talk opportunities in European assets a day after leaders pass a landmark stimulus package. That's coming up shortly, and this is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Thanks, Francine. More than 200,000 Brazilians are asking British judges for the right to sue BHP, the world's biggest mining company. That's over the collapse of a dam 5 years ago that killed 19 and caused lasting environmental damage. If judges let the case go ahead, it would be the biggest class action in UK history. Aluminium producer Norsk Hydro posted an unexpected loss in the second quarter. That's as a sharp slump in demand forced it to take a $200 million write-down. The company says it's taking measures to protect liquidity and adjust production capacity. It's also freezing some planned capital spending for the year. Tesla chief Elon Musk has unlocked the second chunk of his Moonshoot pay award. The company's stock price has hit another target, meaning he can access stock options potentially worth $2.1 billion. Musk unlocked the first tranche of the award in May. Tesla's market value has more than doubled since then. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Laura. Now, the euro strengthened to an 18-month high yesterday. That's after European Union leaders reached a landmark deal for 750 billion euro stimulus package. Well, joining us this morning to talk about Europe and the markets is Joseph Ougourian. He's founder and managing partner at Amber Capital. We'll also ask Joseph about Lagardère in a second. Joseph, before we talk about anything else, actually, in the last 20 to 30 minutes, we understand that China says the U.S. Ordered this abrupt closure of the Houston consulate. We have very little detail, and we don't exactly know. This is after spying allegations on COVID-19 research and things like that. But how do you rate, geopolitical risk right now, and what does that mean for the markets, but also assets that you own or that you're looking to buy?
Hello, Francine. Good to be on the show. I think geopolitical risk has been with us for the last few years, particularly since the election of Donald Trump. So this is nothing new. There's been tension between the U.S. and China on many fronts, and this is just one skirmish in a history that will probably keep on being very tense between those two countries, regardless who's elected in November.
When you look at Europe and when you look at the EU Recovery Fund, as far as I can remember, you were always quite bullish, Joseph, on Europe. Does that make you even more bullish, or is it going to be a crowded market to be long European equities?
Oh, no, I think, it makes me very, very bullish. This is a very, very significant step. Since the creation of the European Monetary Union, what's been desperately lacking in the Eurozone has been a common fiscal policy. And this is the beginning of that, regardless of the amounts, regardless of, what's in grants, what's in loans. I think this is the beginnings of a common fiscal policy, and that's very significant. And that's very good news for European assets and European equities in particular. European equities are very under-owned, and they've been very under-owned for a very good reason. There's been complete mismanagement of the great financial crisis. There's been complete mismanagement of the sovereign crisis. And of course, we've had lots of political problems in Europe. So what we've seen is particularly U.S. investors have shied away from European assets, but they're grossly underweight right now. In general, people are grossly underweight European equities. You see that in the flows of funds. You see that in the valuations. So I think this is the beginning of strong performance of European assets, continental European assets, Eurozone assets.
So where do you find value in Europe right now? What countries?
Southern Europe is interesting, but it's really by sector. I think financials are particularly intriguing. They've been really sold down to extreme levels, as though we were in the financial crisis. But their balance sheets are a lot stronger. And if I look at credit markets are telling me that there's not such a big problem with the cost of risk. So I want to own those assets. And there's a number of sectors which have actually been quite resilient and have not done very well, particularly the telecoms stocks. And there's a lot of there's lots of prospects for further consolidation and greater discipline along those sectors. And that's also the case for the banking sector, by the way. Today, we've had, or yesterday, we had news on Intesa and Ubi, and I think that's the beginning of a long-awaited consolidation process in the banking sector.
So are you trying to buy the companies that maybe take over targets, Joseph, or are you bullish financials overall?
I'm bullish financials overall, but I think there's also some companies that look very appealing at very attractive valuations, and that could be takeover targets down the road. But the sector's been so sold off that frankly you buy the whole sector at this point.
Is there anything that you used to own or were interested in that now you think is no longer a good deal because valuations are too high?
I think defensive stocks are very rich. And I think people have been hiding into defensive stocks, and I'd be a bit worried about those.
Last time you were on with us, Joseph, we also talked quite extensively about Lagardère, where you're trying to shake things up. I think just last week, Amber Capital was looking at possibly having representation on the Lagardère SPVI supervisory board. When you look at the latest of people coming into Lagardère and the changes, have you had, or has Amber Capital had any contact with the Bollorés, and do you know what their intentions are with Lagardère?
We've been in touch with everyone, with all the parties, and the good news here is that you've got two French tycoons that have invested in the company, one at the stock level, the other one at the holding level. That's not listed, but that tells me that if there was two of the smartest investors and biggest French billionaires are interested in this company, there's got to be some value here. It also tells me that they're unlikely to put up with the crass mismanagement that we've had at Lagardère for the last 2 decades.
So do you have the same vision? Do you share a vision with some of them? I mean, is Amber Capital now having to prepare to actually fight against Vivendi and its controlling shareholder Vincent Bolloré, or are they on side?
No, I think that all the discussions we have with all our fellow shareholders are very constructive. And I wouldn't say that, I certainly wouldn't say that we're acting in concert. I wouldn't say that, we have a common purpose. I mean, we all have a common purpose, is that things improve at the company. And they can only improve from such a low level of management.
Joseph, do you have any insight into what Qatar will actually do with its stake in Lagardère? I know we were talking before, a couple of months ago, and you said you could also look at increasing your interest in Lagardère.
I don't know what Qatar wants to do. We've increased our stake in Lagardère. We're close to 20% of the economic rights, and we've gone through the 15% of the voting rights. I've noticed that Vivendi has done the same, and I've noticed that they've asked for a board representation, or they might ask for board representation. There is certainly lots of question marks around the transaction that was done at the holding level, around, what's called the LCM, which is the holding company, with Mr. Bernard Arnault and his family holding. We do hope, because this transaction was announced on the 25th of May, that the AMF, the French regulator, will force the company to disclose the terms of that transaction. It's been rather opaque, and it's quite surprising that the AMF hasn't done anything whilst a quarter of the capital of the company has changed hands. So we would hope more clarity, and we've been asking for more clarity to the French regulator. We would also hope that this transaction wouldn't go against the interests of the shareholders of the listed company where we are invested, and where Mr. Bolloré and where the Qatar Investment Authority is invested. And I'm sure we will all defend our rights when the time comes. But I'm confident that things will improve greatly in the company. I think the stock is incredibly, massively undervalued. You're paying nothing for travel retail. And yes, airport traffic has come down dramatically, but travel retail eventually will come back to more reasonable levels in the coming years. And at that point, there'll be evaluation, there'll be value there.
Joseph, just circling back to banks, is there a bank that you would want to get a piece of right now? Is there one particular bank, one financial stock that actually looks undervalued?
We like the sector in general. We like, in particular, some of the Italian banks. We like some of the Spanish banks and the Greek banks. We think the Greek banks, the help from the recovery fund is massive as a percentage of the Greek GDP. And we've been avoiding banks for the last few years, thinking that there was lots of regulatory uncertainty around banks, and very low interest rates were not good for the sector. But things are quickly turning. The capital is adequate. The regulator is giving lots of forbearance. There's consolidation. There is one bank which we love to own because it's the cleanest of the Italian banks. It's probably the best one of the best managed banks in Europe. It's UniCredit. I think Jean-Pierre Mustier has done an amazing job there, and you know, we think that that bank is just grossly undervalued.
Great, thank you so much, Joseph Fougourian there, the founder and managing partner at Amber Capital. Now, coming up, we talk about Tesla. Its surge has added more than $100 billion to its market value since late June, unlocking a $2.1 billion reward for Elon Musk. Now it's the company's earnings that must deliver. We talk Tesla's quarterly report next. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacroix here in London. Now let's talk about one stock that has had a stellar summer. Yes, Tesla has added more than $100 billion in market value since late June. Now the surge in shares faces a major test this afternoon when the company reports financial results. Well, here to walk us through what to expect is our Danny Berger. Hi, Danny.
Hi, Francine. Well, part of the reason that Tesla has had such a good past month is because expectations are high for the second quarter that they'll post strong deliveries. And that's given Elon Musk a huge payday. So when we look at what the market cap's done, briefly surpassed $300 billion to become the most valuable auto company. And then passing the threshold of having a 6-month average market cap of $150 billion means that Elon Musk got access to about 1.69 billion option contracts. Now, he can't sell those for another 5 years, but currently on the market, if he were, it would give him $2.1 billion. So you can see Elon Musk's net worth went up significantly as of late. But on the line here for this quarter is if it can post another quarter of profitability. You can see that it's already done 3 in a row. What it needs is a full net profitability for an annual period. If it can do so, it meets the requirement of getting into the S&P 500, and doing that would give it access to a lot of passive money and institutional investors that follow indexes. So again, these shares priced to perfection, so we're looking for a net profit here, Francine.
Thank you so much. Our Danny Berger there with the very latest on all of this. Danny, if we have time, actually, talk to me a little bit about what else we're looking for, because I know Snapchat posted earnings yesterday. Did their net loss make any progress?
Their net loss actually widened, Francine. And of course, there's a parallel here with Tesla, unable to post a profit. And you can see this is their user growth. The yellow bar here is what was expected. They just barely missed, but this is the most important metric for Snap, and it could be a bellwether for the rest of the social media industry, Francine.
Thank you so much, Danny. Now, coming up, a slump in aluminium demand pushes Norsk Hydro into the red. We speak exclusively to the chief executive. That's next, and this is Bloomberg. This is what... Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Thanks, Francine. The US is charging 2 Chinese hackers with stealing or trying to steal terabytes of data, including coronavirus research. The Justice Department says the information taken was worth hundreds of millions of dollars, adding the 2 men were assisted by Chinese officials.
Their criminal activity instead of acting like a normal government would, which is shutting down criminal cyber intrusions, allowing them to continue it because they're on call for the benefit of the state.
The US and UK are signaling more coordinated action against China. Visiting the UK, Secretary of State Michael Pompeo says he wants to build a coalition that understands the threat posed by Beijing. Speaking with his counterpart, UK Foreign Secretary Dominic Raab says further action may follow at the G7. Judy Shelton is one step closer to joining the Federal Reserve's board. The president's contentious pick cleared a key hurdle, winning approval of the Senate Banking Committee in a party-line vote. The panel also voted in favor of nominee Christopher Waller, who passed with a clearer margin. The nominations now go to the full Senate for confirmation. Global news, 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Thank you so much, Laura. Now let's get to our exclusive conversation. Norsk Hydro has posted an unexpected loss in the second quarter. A sharp slump in aluminium demand saw the Norwegian company report an impairment on key production assets to just under $200 million. Now, Norsk Hydro says global aluminium demand dropped by 9% in the period, but in Europe, usage of extruded products slumped by 32%. Well, joining us from Oslo for an exclusive conversation is Hilde Merete Esheim, the Chief Executive Officer of Norsk Hydro. Thank you so much for giving us a little bit of your busy day today. Hilde Merete Esheim, when you look at the markets and how much they fell, when are you expecting things to get back to something that is a little bit more normal?
Well, obviously, the COVID-19 situation has heavily influenced our second quarter earnings, and we disclosed this morning the sales for extruded solution, which is our largest business area, with a 30% drop in sales for the second quarter. In particular, we have seen reduced volumes in the transport and car segment. And even though the situation is very unclear, we believe that the next quarter will see somewhat relief, but still at the level of between 15 to 20% lower sales in Q3 than in Q3 last year. So, still the situation is unclear.
Yeah, so, but you are seeing signs of a recovery. How long do you think it will take for these markets to fully recover? Is it too difficult to call given the COVID situation, or you just don't know how it will change longer term?
I think most analysis point to that the recovery will not happen within this year. We have seen China we've seen good signs of recovery in China, but on the other hand, in the US and Europe, we believe that it will take a couple of years where we will be back at pre-COVID levels.
What is your biggest concern in the shorter term? I know you've done quite well, for example, at keeping costs down. We saw record low costs in some places, like your Alunorte plan. Can you get that to something that looks more permanent, like permanent cost cuts?
Well, my main concern in this situation has always been the safety of our people, and I'm very happy that we have been able to protect our people at the same time that we have been able to keep the wheels turning, and in particular in Brazil, which has a lot of influence on our earnings, that we have been able to sustain and have full operation in our Brazilian assets, both in Alunorte, in Paragominas, and in Albras. One of the reasons for why we have been able to do that is a lot of precautionary measures, both inside the fence of the plants, but also working very close in the local communities with assisting the local communities with hospital beds, with equipment for the local hospitals to ensure that the health of the people is protected.
Going back to costs, or if you look at your cost reduction, can you stay at these levels once market resume, or is there a risk that costs go back up like they used to be pre-COVID?
We started an improvement program last year, which with a target of 7.3 billion kroner to be delivered by 2023. Despite the COVID turmoil, we have been able to focus on the improvement program throughout this COVID situation, and we are on track to deliver 4.1 billion kroner by the end of the year. And I believe that these cost level can much more a lot of that can be sustained also after the COVID. And that is part of the overall agenda for Hydro to improve the profitability and driving sustainability throughout the company.
You're also undertaking a review of your rolled products business. Can you give us an update on that?
Yeah, the review is progressing, but obviously due to the COVID situation, the process has been somewhat delayed. But yes, this review is ongoing, where we look for alternative solutions for the rolled product business.
How should we view your dividend policy?
The dividend that we were supposed to deliver this year has been postponed. The board has got a mandate to hold the dividend until the situation is more clear related to the COVID situation, and that is still the case.
All right, thank you so much for speaking to us. Hilde Merete Eschem, there, the Chief Executive Officer of Norsk Hydro. Now coming up, pedal to the metal, gold nears an all-time record and silver rockets higher. Up next, we discuss the flight to havens. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, pedal to the metal, gold continues its march towards a record on expectations that more stimulus is needed to help the global economy recover from the coronavirus pandemic. Silver has also jumped to the highest in 7 years as investors flock to the precious metal due to a resurgence in virus cases, slowing growth and negative real interest rates in the U.S. Well, global head of commodities at Citigroup, Ed Morse, told Bloomberg that silver will also win an extra boost from its use in industrial applications.
The most convenient way to do it is through an ETF. You don't have the inconvenience of owning the bullion and worrying about storing it and having it move from place to place. bullion is, great, but how do you store it and how do you hide it under a mattress? No, it's ETF. It's the financial instrument that provides you convenience by not having to deal with the physical material.
So, and a few of the elements that seem to be boosting bullion also seem to be helping silver as well. But in fact, when it comes to silver, how much of the industrial demand rebound optimism is playing into it as well?
It plays to it. So, silver is the poor man's or poor woman's gold. So there's an element of all of those other things that go into the gold market, the depreciation of the dollar against other currencies, continued world of high risk and low interest rates. But in addition to that, you have the industrial uses of silver, in particular in photovoltaic cells, and that boost should really change the relationship between silver and gold. So in terms of looking at the next year or two, we think you got a combination of factors: the underlying factors that are boosting gold and silver, and the industrial factors that should change the ratio between silver and gold.
So I have to ask the age-old question right now, given the unprecedented year that is 2020, do we look at gold as a commodity or as a currency? What do you advise investors to kind of, shift their perspective into?
So we have never actually thought of thinking of gold as a commodity. It's not like other commodities. It's not consumable. You never really lose the store of gold in the world. It is more like a currency. It's more like an asset that fluctuates with a lot of other things. And this is kind of moment where gold really works in terms of the yield that you can get from it based on all other things that are happening in the global economy. You don't have to worry about deterioration, consumption. It is something unlike other commodities, which gives you a sense of where the world is going rather than a snapshot of the world is currently.
Is the momentum and bullishness that we're seeing for the outlook for gold unprecedented to you, or is it comparable to any other period of financial history in your experience?
It's comparable to other periods. We have a couple of unique things happening. If you look at the price of gold in a whole bunch of currencies other than the US dollar, it has never been dearer than it currently is. If you look at the nature of the world we're living in, we're going through a critical environment that can be compared to something so far worse than the great financial crisis, when gold ETFs came into being in a big way for investors. And it's on the dangerous precipice of being something like the Great Depression, 28 to 32. So yeah, there is something unique about it, although we've seen the play in gold in 2008-9. We saw the play in gold in 2016, but this is, in terms of risk in the global system, something that nobody living today as an adult has ever seen before.
So you're pretty bullish on precious metals. What would actually make you change your stance, if at all? What elements would you take into account?
I think the biggest one would be if there really were an inflation rising in the world economy somewhere. You can think about inflation in terms of food and fuel. We have, just in the US, a very limited, in terms of recent history, amount of acreage under cultivation. We have very adverse weather conditions. And if you look at the main food staples, soybeans, wheat, and corn, they look like they could be inflationary. And with the dollar depreciation, inflationary across other countries. And similarly with energy. So it's food and fuel that lead inflation, and reflation could be a damper, it could be a headwind.
Well, that's the global head of commodities at Citigroup, Ed Morse, speaking to us earlier. Now let's take a look at some of the events happening today. The U.S. Secretary of State, Mike Pompeo, is in Denmark for talks on Nord Stream 2. That will be on the agenda. At 2:15 this afternoon, London time, the ECB President Christine Lagarde will participate in a Washington Post live webinar. The central bank's Vice President, Luis de Guindos, is also speaking online in the annual US-EU symposium. His speech is scheduled for 4 p.m. And Goldman Sachs Chief Executive David Solomon joins the Economic Club of New York at 7 p.m. to discuss the impact of the coronavirus pandemic. Coming up, what are the risks and what are the opportunities for private equity in this exceptional year? We'll ask Bridgepoint Managing Partner William Jackson. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacroix here in London. Now, a couple of the stories that we need to bring your attention to. First of all, Hong Kong has reported a record daily local virus cases with 105 infections. So we need to keep an eye on that, as it will be a good benchmark on whether a city can get rid of the virus or at least flatten the curve significantly, and then try and protect itself as we're seeing infections rise in Hong Kong. The second piece of news that we need to bring your attention to, after all of the focus on this Chinese consulate in Houston, where we understand there's also a fire ongoing. The U.S. State Department has now confirmed that China's Houston consulate will close. This was confirmed by Chinese authorities earlier. They're also saying that this is over intellectual property issues. It may be linked to the spy that we saw yesterday. It may not. So keep an eye on that. We'll bring you any breaking news from Houston and from China. Now let's focus on private equity. Bridgepoint focuses on established market-leading companies valued up to 1 billion euros. But with many of the sectors targeted by the PE group hit hard by the coronavirus pandemic and with an uncertain future, is this a good time to invest? Well, I'm delighted to be joined by William Jackson. He's managing partner at Bridgepoint. William Jackson, thank you for joining us. On Bloomberg surveillance, when you look at COVID, when you look at how our economies have changed and will change in the future, what does it mean for where you find opportunities of companies to buy?
Well, it's a fascinating time, isn't it? I mean, against all the terrible things that are going on out there, I think from an investment perspective, this is a great moment for private equity to come into its own. Because the model is so attuned to action, when you think about it, private equity has this very direct connection between a company and its shareholders. It's very well suited to the times. So I think the issues when we look at the market are where are businesses today, what are the challenges they're facing, and the big challenge right now is just how long this crisis is going to go on for. And in the boardrooms I've been in, people are starting to think about this going right through to 21. Against that, the need for capital is going to be out there, and there are going to be some very interesting investment opportunities.
So William, what does it mean, first of all, in private equity exits? For the moment, as far as I can tell, looking at numbers, the exits have all but stopped during, the pandemic. When are private equities going to be able to exit some of the things, and when are we going to see big acquisitions?
Yeah, well, it's a really good question, Francine. I think the real question that sits out there is what is the right value for growth? And what I've been surprised about is, obviously you've got the stock markets very high at the moment, or back to where they were, which is interesting in the context of where the real world economies are. But exits have come back actually surprisingly quickly. So you may have read last week, Bridgepoint announced a $1 billion sale of Revensa. We did another transaction the week before. So I think the world is coming back quite fast on this, but it's very selective in the assets that people want to acquire. It's got to be in the right sector. It's got to have good growth prospects. But if you've got that, I think there'll be quite a lot of liquidity around.
Where do you find the best value right now? Are you actually targeting any companies because valuation is cheap, or you just don't know what the economy will do, but also how it kind of puts us, on a different footing? So you're waiting to see what the pandemic shapes up to be.
Well, I think this whole question of where valuations are is really, really interesting, because you've got a tug of war between economic collapse that is going on across some sectors, and have we seen the real impact of this crisis yet? I'm not sure, particularly given the support that governments have given companies. Against that, you've got massive government stimulus. So that is the real challenge here. But there are definitely sectors that have great growth prospects. You look at the repositioning of healthcare that's going to go on through this crisis. You look at the move online, much of this is, I think this whole period is about acceleration of trends that were already there. So that's going to create some interesting opportunities out there.
Do you worry? I mean, what's the main worry right now? Do you worry about companies not having enough cash flow? Do you worry? What kind of level of due diligence do you have to do now compared to 2019?
Well, I think the real challenge is people are flying blind still on 21 earnings. When you look at this, nobody really knows how 21 is going to turn out. You haven't got big corporates in the quoted sector giving guidance yet about their 21 numbers. You're starting to see this second wave come through. The news in Melbourne overnight, the challenges in the southern states of the United States. But I think my view would be that it's amazing how quickly people resume to some kind of normal. So although economies have stopped, I think people will be very innovative about getting their businesses back. And, Zoom is a really interesting dynamic itself, because at the beginning of this crisis, I think we all thought this was really the way through and great, we can all work from home and all the rest of it. What's very clear is that if you're trying to grow a business and develop it, it's very, very difficult to enhance and build those relationships via Zoom. So I think you will see people getting back into offices, trying to do so safely, but I think that's going to happen quite quickly. And when you're looking at new investment opportunities, I think it's about looking at the sectors that can operate in this environment and adapt quickly.
William Jackson, will you, buy companies with more attention to ESG issues, to more diversity? Has 2020 actually been a game changer for things like that?
I think it has been a game changer, Francine. These are no longer, people used to describe these issues of, well, we're putting a big effort into inclusivity and ESG. They are day-to-day business now. It's really, really important. And actually, it's important not just because it's the right thing to do, but it's important because I don't think people will want to buy businesses that don't have these well-developed policies in place and are making progress. Now, it's a journey because a lot of companies have got a long way to go. The important thing is you're on that journey.
Thank you so much for joining us. William Jackson, there, managing partner at Bridgepoint. Now, this is what the markets are focusing on. We broke that headline just a couple of minutes ago saying that, of course, the U.S. has confirmed that the Houston Chinese consulate was closed, but they give us a little bit more glimpse into why this happened. And this, according to the U.S., is because of intellectual property issues. The market's turning a little bit down because of this, so they're pricing in more and rising U.S.-China tensions. Stocks here in Europe are dropping. Futures are also dropping. If you look at the dollar gauge, it's erasing a decline, and treasuries are edging higher after that news. Now, Bloomberg surveillance continues in the next hour. Tom Keene joins me out of New York. Later, our conversation with the chief executive of NASDAQ, Adina Frieden. This is Bloomberg. Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. have to wait. The word from U.S. Congress is that the next tranche of stimulus may not come until August. Republicans back stimulus checks, but a payroll tax cut is in question. Metals shine, silver jumps to the highest in almost 7 years, and gold rises towards a record amid uncertainty over the recovery. And Elon Musk's payday, the Tesla boss nails a $2.1 billion award as the car maker's market value reaches a milestone. The company reports earnings today. Good morning, everyone. This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, the big story, of course, in the last hour and a half is that risk sentiment looks shakier after what happened in the Houston consulate. This is China first saying that the U.S. abruptly ordered the closure of its consulate, and then moments ago, the U.S. saying this is over intellectual property issues, and the State Department has confirmed that this consulate in Houston will close.
Well, it's a breaking story, and it goes to Secretary of State Pompeo in the United Kingdom yesterday. We can address this with Sir Howard Davies here in a moment, Francine, but this is really extraordinary and really, really, really important. We have consulates in China. Clearly, the Chinese have said they're going to act rapidly on this. The backstory of this is intellectual property, which is nothing more than the stealing of trade secrets. Ellen Nakashima in the Washington Post in recent days writing up the trial in Houston on the foam that holds oil platforms in the water, where there's literally a court case going on about the intellectual property value of the foam that holds up big pieces of steel in the water. Just one example of around this breaking story.
Yeah, and this also comes on the back of what we heard yesterday, right, Tom? And the U.S. and other countries accusing China also of hacking and trying to get research information regarding COVID-19.
Yeah, absolutely. No question about that. Let me do a data check right now, folks. We're going to get to Sir Howard as quickly as we can here. Futures negative 17. That's not the story. The story is safe haven, and you see it quickly in yield, where the 10-year yield has come in with a vengeance, 0.59. We even had a 0.58 handle here. You see it in the two-year United Kingdom yield coming into a new negative yield, and gold was out to 18.53 an ounce. On a weekly chart, gold's at a record high. On a daily chart, we're getting up near where we were a number of years ago. Francine?
Yeah, Tom, I'm also looking at the same markets that you are. Treasuries edging higher, the dollaring racing a loss. So it's very clear that there's a risk-off mood. If you look at European stocks, they're actually at a session low. Futures on the S&P 500 also dropped, and then gold nearing 1,850 an ounce. Silver retreating a little bit, but it was the highest level in about 7 years. Now, to talk about the markets, to talk about the banks, to talk about geopolitics, we're delighted to be joined now by Sir Howard Davies. He's NatWest Group chairman, and actually NatWest Group because you rebranded today, Sir Howard. So actually, also congratulations on that. Maybe first, just on this consulate, story in Houston. Are we assuming that things between the U.S. and China, that China and the rest of the world will actually escalate on intellectual property issues?
Well, it's a difficult one for me to answer because some cynics would, of course, say there's not much intellectual property in banking, and I think the financial sector has not been particularly affected by this issue. But I do know that many companies are concerned that their intellectual property has been, well, whether stolen is the right word, but has been used by Chinese competitors. What I find is slightly surprising is that this is something that's taken place in a consulate. I mean, most Western countries' consulates are involved in issuing visas. They're not involved in industrial espionage. But it looks as if the Americans do have some reason to think that's the case. I would say, however, that these kind of tit-for-tat closures of offices are things which are quite easy to do, and sometimes they're almost like a safety valve, if you like. So you close something, they close one of yours, and everybody's made their point. But it'll be interesting to see if there's something more to it than that. If it's just a reciprocal closures of consulates, then it's probably a relatively minor question.
How does COVID-19 actually change the trade war between the U.S. and China? Does it make it less likely that we'll see a real, second trade war or continuation because of the already depressed state of the world economy?
Well, it raises the stakes, of course, because when everything's going well, governments feel that they can perhaps make make gestures or make political points in the trade area without too much damage. I think what the COVID situation means is that you're playing with fire here because you're operating against a rather fragile economic background anyway, and therefore taking tough trade measures, imposing tariffs, is going to be potentially more damaging than it would be if trade is otherwise buoyant. So I think that's the way in which it affects it.
Sir Howard, I must turn to this historic moment for Europe that we saw over the weekend. You are qualified to speak on this with your tour of duty at Sciences Po, and of course with your work at the London School of Economics. Is Europe a better place this morning because of what occurred this weekend to consolidate a United States of Europe?
Yes, it is. Whether a United States of Europe overstates the case, I think perhaps it does. But it's clearly a kind of Rubicon has been crossed here, in that they have agreed to collectively guarantee borrowing. And that's been something which the Germans and others have held out against for quite a long time. That, I think, is a very important moment and suggests that the arguments for solidarity, a word that doesn't translate terribly well into English, that the arguments for solidarity in Europe have won the day, at least temporarily. So I do think it's an important moment. Indeed, you could see by the fact that it took them 4 days to get there that they were overcoming some very serious issues. So I'm modestly optimistic about the way this has turned out, and I think we could see a stronger European recovery as a result.
From where you sit right now, and with all your radar at the NatWest Group and all of your discussions within academics and the experts that are out there, how in recession is the economy right now? I'm having trouble getting a gauge of the depth or persistency of a slowdown in aggregate demand. The markets are telling me it's worse than the chit-chat. What is it, Sir Howard?
Yeah. What we've seen so far is that some parts of spending have recovered really quite well. Spending on staples, if you like, has been pretty flat through the period, and that's okay. And spending on consumer durables has picked up really quite sharply. What we have not yet seen is a sharp pickup in what you might call social expenditure, eating out, obviously all the arts-related cinemas, etc. That has not yet picked up. And so the question is, will people be confident enough to go back to their previous practices of social expenditure? And that, I think, is going to take quite a bit of time. So my favoured view of the shape of the recovery is that we have had the beginnings of a V-shaped recovery, and that's been quite good as far as it goes, in fact slightly better in the UK than the Bank of England thought, but that the next part of the V may flatten out a bit, because then you reach some social and psychological issues about people's confidence, and that, I think, will take some time to recover.
Sir Howard, thank you so much. Sir Howard Davies of NatWest Group stays with us, and we'll talk also about the banking landscape in the UK next. Now, coming up a little bit later, William Ackman, Bill Ackman, Pershing Square founder and chief executive officer. That's at 1 p.m. in New York, 6 p.m. in London, and this is Bloomberg.
Everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Let's get the Bloomberg First Word News. I'm Ritika Gupta. Another sign of worsening relations between the US and China. Beijing says the US has ordered the closing of the Chinese consulate in Houston. China calls that an unprecedented escalation. The US says it's because of intellectual property issues. Firefighters were sent to the consulate after reports that papers were being burned in outside containers. President Trump has rebooted the coronavirus briefings with a shift in tone and a warning. He was notably more reserved than in the past. He encouraged Americans to wear masks and avoid risky behavior. The president promised that the virus will be defeated, but he said it will probably get worse before it gets better. Republicans putting together a coronavirus relief plan broadly support the idea of more stimulus checks to individuals, but they're expressing doubts about President Trump's call for a payroll tax cut. The differences between Republican senators and the White House threaten to push any action on the stimulus into next month. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Francine Lequan, Tom Keenan with us. Howard Davies of the NatWest Group, of course, his esteemed academic career with leadership at the London School of Economics and now chairman of NatWest Group as well. Sir Howard, what I noticed this weekend was who wasn't in the photo, who wasn't in the conversation, and that was Britain. That was the United Kingdom. I know it's a generational change in Europe, but part of that is a seismic shift of Europe really, of the United Kingdom really not participating. How alone is the United Kingdom right now?
Well, we're in a slightly curious phase because we are in the exit lounge, departure lounge from the EU, but we haven't quite left because all the rules still apply to us. And I think it is fair to say that we have not yet situated ourselves on the world stage in a way that we will need to do after Brexit. The government was working on that, but the Brexit talks, of course, are proving a bit difficult, not least because of COVID-19. But I do think that if what lies behind your question is, what is the role of the UK? I think that is an open question. Someone wittily changed the Dean Acheson quote to say that Britain has lost an EU but not found a role, which I think is probably true. And I personally feel it's a bit unfortunate. And I think we do have a contribution to make globally, and we need to resituate ourselves after Brexit. But realistically, the government has other priorities at the present time, which one completely understands.
I don't mean in any way to denigrate anybody here, but it is a phrase that's out there. I know it was a popular TV show years ago. Is there a risk here, Howard Davies, of a Little Britain?
Yes, Little Britain is now not a particularly well-remembered show because of various caricatures in it, so we don't talk about it anymore. But there is a danger of that. Now, the government's rhetoric is we are going to be a global Britain, we're going to be a global player, we're going to row our own boat, but we are going to do so in an open trading way, and I hope that's true. But unfortunately, that is quite difficult to achieve, and we've heard today that there is not likely to be a US-UK free trade deal by the end of the year, which the government had hoped. So this reorientation outside the EU is going to take us quite some time. The practicalities of negotiating free trade deals are quite complicated and I think have been underestimated by this government and the previous one for the last 4 years.
Sir Howard, if you look at the UK, how worried are you about bad loans? Unemployment will rise, and with it, of course, some of the concerns in terms of provisions that will need to be booked by banks.
Yes, that is certainly true. One important point, I think, which we need to register in terms of the long-term impact of the COVID-19 on the economy, is that there's likely to be a shift, if you like, in the relative price of capital and labor. It looks as though capital goods are going to be relatively cheaper, and labor will be, for various reasons, slightly more expensive because of the social distancing measures, the way in which people have to be supported at work. Labor is likely to be somewhat more expensive, and of course, companies have discovered that they can operate with fewer people and people working from home, etc. So over time, I think there's going to be a bit of a rebalancing, which is likely to mean some structural unemployment, which will take some time to work off, and that will require retraining and restructuring, etc. So that prospect is, I think, quite a difficult one. Now, you set against that background what's happened in relation to businesses. You know, we've just as one bank have lent about £10 billion in business interruption loans and bounce back loans, as they're called. And clearly some companies are going to have difficulty paying that back, which is why there's now a bit of a debate about whether there should be some sort of recapitalization vehicle. Government's reluctant on that because the moral hazard issues. You don't want to hand out loans and then say to people, don't worry, you're not going to have to pay them back. But I suspect there will need to be some recapitalization of firms in the next 6 to 9 months in order to avoid a large number of redundancies. And that's something that we are working on. We're working with individual customers, and we're working collectively in the city to try to devise appropriate schemes to try to mitigate the impact of the withdrawal of the government support mechanism, which has to happen fairly soon.
But how difficult is it to model bad loans specifically?
Well, we all have to do so, whether it's difficult or not. We will be publishing our half-year results at the end of next week, so I need to be super cautious about what I say about it. There is, of course, a new accounting standard, what's called IFRS 9, which roughly has the effect of pulling forward provisioning earlier than it used to be. So I think what the market's going to have to register, and you've seen that through the American banks in the last 2 or 3 weeks, is that there will be earlier recognition of bad loans than there were in the past, and the market's going to have to understand that, and that's partly to do with accounting rules which have changed.
Sir Howard Davies, thank you so much. He's chairman of NatWest Group. We've got much more coming up, including a conversation with the Iberdrola chairman and chief executive officer, an update on Spain. This is Bloomberg. Good morning.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff, and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
the Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
The national security bill was passed by Chinese lawmakers. The Hong Kong police force has already acted in accordance with the new law.
It's a very disturbing development.
This is, in effect, an attempt to end one country, two systems.
The central government is telling us just stay out of politics.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, Spain's largest utility company, Iberdrola, says the lockdowns from the pandemic and currency weakness in Latin America dampened performance in the first half of the year. Well, joining us now to talk about this, to talk about COVID-19 and the impact on the economy, is Ignacio Galán. He's Iberdrola chairman and chief executive officer. Mr. Galán, thank you for joining us. How quickly do you expect prices for energy and demand for energy to get back up after what we've lived through in the last 3 to 4 months?
Well, I just presented our results, first half results, and I put a couple of charts in which we reflect how been evolving the evolution of the electricity demand and the forward prices evolution as well. And I think in terms of the demand, in this moment, I think in February, we're in most of the market at the level of -1%, -2% rates in Spain and United States. In this moment, we are at -5%. We have already passed through moments of -25% in terms of demand in certain weeks, in April, and -18% during April as a whole. Forward prices, the same thing. The forward prices, I think they were in February at the level in Europe and in the continental Europe range of 44-45 euros per megawatt hour. Now it's on 44.4, the forward price in July. In United States, the situation is similar as well. February prices were in the range of 42. In this moment, it's in the range of 44, 45, 46 some days. So, which I think we are already moving back in prices, and we are slightly below in demand, but moving on the same direction, positive direction as well.
Mr. Galán, Latin America has suffered more than a lot of regions in recent weeks. When does that actually region get back on its feet, and what does that mean for demand there?
Well, I think in Latin America, we are mainly two countries, which is Brazil and Mexico. In the case of Brazil, the government has already taken, in terms of our sectors, quick actions to protect the companies. So has already created what they call coronavirus conta, a loan of balance loan for the companies to inject liquidity into the distribution companies to minimize the effect of the lower demand, especially the bad debt, because I think if you are not able to go to collect the money to your customers, I think the customer cannot pay. So for that one, they've injected quite a lot of money. In our case, was 1.6 billion reais for our companies there. And second, they are already in the process to make an extraordinary tariff review to compensate the negative impact of the COVID. So in terms of in the case of Mexico, I think they are already still in a situation which is far too insane in Brazil to reach the peak, but I think they are taking action as well to minimize the effects through measures to protect the most vulnerable customers. But there we are not already that access to customers because we have only power generation, and the power generation to the industry has not changed very much. I think it's practically the demand is maintained because they have continued working during this period.
I know you've been trying to buy IF again. Is it now a done deal after you've sweetened the offer, and are you looking for more acquisitions going forward?
So I think Ifigem is a company we are present in Australia. We are in this moment investing something like $500 million, something like that, in two projects for making some wind farms and some photovoltaic. I think we've been already with these people in talks since the last 12 months, and I think during this process, I think somebody has already made just a bid for it. So we are already very interested in that one. That fits completely in our M&A greenfield model, which give us the opportunity of much fast expansion in Australia, which is becoming a strategic country for us. So we hope in the next few days or weeks,
okay, sir, thank you so much. We have to go. Mr. Galan of Iberdrola, please stay with us. This is Bloomberg.
Greatest fear is if we continue with a system that allows pharmaceutical companies all the monopoly control over the medical solutions to this pandemic, that we're going to see a situation of a bidding war, essentially, between rich countries.
I can't block the U.S. from doing deals. Of course, I would imagine many allies would be quite unhappy at the time if they're dying, their populations are infected, and that's not being shared. So what we can do is create legal agreements with companies and try to move forward. If at the end of the day, those legal agreements are broken or countries seize assets or don't allow provision of vaccines, that's a problem.
We'll have to find a solution because some of these arrangements have been made. And I think we have to be pragmatic about it. I think we also have to stick to our guns.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Rishika Gupta. Let's get the Bloomberg First Word News. President Trump is warning that coronavirus pandemic will probably get worse before it gets better, and he urged Americans to wear masks. The president resumed the daily virus briefings 3 months after he abandoned them. Polls show more of the public blames him for failing to control the outbreak. And President Trump speaks today on what he calls combating violent crimes in American cities. His push for federal agents in cities hit by protests and spikes in crime is a policy that appeals to his base. Mayors around the country warn they'll resist if the president sends agents to their cities, and as he has to Portland, Oregon.
China calls it an unprecedented escalation. The U.S. has ordered the Chinese consulate in Houston to be closed. According to the State Department, it's to protect American intellectual property and Americans' private information. The move is likely to lead to retaliation from Beijing. Last night, Houston firefighters went to the consulate after reports that documents were being burnt in outside containers. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Francine.
Thank you so much, Ritika. Now, for more on China vowing retaliation after the U.S. shutting down this Houston consulate, let's get straight to Derek Wallbank, our Bloomberg senior editor. Derek, first of all, what do we exactly know about the reason for the shutdown?
Well, Francine, the approximate reason the United States said was to defend intellectual property, to protect it, and to protect America's private information. The State Department said in a statement that international agreements require diplomats to respect the laws and regulations of the host nation, not interfere in its internal affairs. All of that statement implying that China had done something to run afoul in one of those areas, although it didn't give many more specifics than that.
Derek, what's so fascinating here is it's clearly intellectual property. It's clearly economic driven. The Washington Post has a nice summary a few days ago of a court case in Houston on China espionage. I'm saying that, folks, in a loose manner. Derek, which city is the economic consulate city for America in China? Is it fathomable that they would shut the U.S. consulate in Hong Kong?
Yeah, Tom, that's one of the things we're watching for right now. There's a couple of options that America has. There's a consulate in Wuhan, for example, that I've heard some chatter, nothing informed, but just like that people are speculating about. There's any number of options. The trick that China's going to have is to try and calibrate this response such that it responds in a way that the Chinese people say, okay, well, that was a serious thing, without maybe escalating past the point that they want to escalate to.
I mean, what would escalation actually look like?
Oh, that's a good question. The problem here is that you've got a Pandora's box of options, right? And all of them are bad in some way. And you see this reflected in the market data that comes, that's come, and the sort of like risk sentiment that you're seeing in there. I hesitate to speculate on where you could go, but a lot of it is on the possible table, right? You could go for consulates, you could go for visas, you could go for company restrictions to places like Boeing, like Apple, that do brisk business in China. I mean, the options really are sort of limitless. You've got a very large menu you can pick off of.
Derek Wallbank, thank you so much. A quick view there from Asia. Right now in London, Robin Niblett joins us with Chatham House. Chatham House, of course, with a broad remit in international relations, including 3 years ago, a wonderful article on the closing of the Russian consulate in San Francisco. I mean, Robin, this is International Relations 101. When in doubt, close a consulate. This is almost a normal procedure, isn't it?
Yeah, I mean, I think if it weren't for the timing, the fact is that there's a real sense, especially here in London, of a increase in the temperature, an intense increase in the temperature on the pressure being brought to bear on the Chinese government at a time when it itself is under attack from obviously a whole host of countries that feel they've been badly done by China. So it's the timing. The attack on the consulate has echoes even of the Cold War. Often outposts, especially consulates, which have obviously an economic role principally rather than a political one, would be a logical place to make this kind of a hit. In itself, it wouldn't normally make news, but coming at the time when Secretary of State Pompeo is in London, praising Britain's big push to remove Huawei from the UK 5G network, the change in extradition treaty, there's a real sense of motion and movement, and that this administration is not going to let up in these last 3 or 4 months before the presidential election. So I think it's the timing more than anything.
An unfair question, Dr. Niblett. How do these things end? Your study of tit for tat, if you will, what's the normal process of how everybody kisses and makes up?
It's interesting that if you look at historically, and again, the UK's experienced this as well, the Chinese can be very tough in retaliation in the near term, but they have a way of allowing economic interaction to continue beneath the surface. Australia is a good example right now, which is heavily in China's eye for demanding that the Chinese undertake an investigation. There'll be an international investigation of the origins of the coronavirus crisis. There were all sorts of sanctions put on, or limits, should we say, put on Australian barley exports. But underneath the surface, Australia's had one of its biggest years ever of selling minerals, mining iron ore to the Chinese. So my sense is the Chinese are going to be very careful in how they calibrate tit for tat right now. They do not want to put more countries into America's camp. They want to try to keep Europe at least a little bit in play. So I think the Chinese are going to be very cautious about letting this escalate. They won't drive escalation, in my opinion.
Robin, why is the U.S. going after China right now? Is it for also, political reasons? We heard of IP theft in the past. Has that increased, or is it just convenient for the U.S. to point the finger at China right now?
Look, it's a whole host of factors. I'm trying to break them down in my mind because it's such a big question in a way. There is no doubt, in my opinion, that under Xi Jinping, China has tightened up, centralized, restricted human rights and human freedoms, not just the Uyghurs and Xinjiang, but more broadly. There's been a reassertion of centralized Chinese communist control after the period of opening. And this has given the lie to the idea of a China opening up. Now, if that's the case, then any countries that are deepening their economic interaction with China have to think, hold on, are we actually supporting, by doing so, a communist party state that not only is being more draconian on its internal controls and breaking standards in international human rights in some areas, but also one that might spread those values internationally. We've seen this in UN organizations where the Chinese have increased their influence in a whole host of areas for Chinese nationals heading up UN agencies right now. So I think this administration, which contains some people who've always thought that China was a growing threat, have never been in an administration where they can push it. They see a moment to change not just America's policy towards China, but to wake up the rest of the world and change a whole Western approach to China. So there's a sense that China has not changed the way some people thought it would. Those who've always been suspicious want to bring down the hammer, and things including like intellectual property, but not only intellectual property, are a window through which to do it. So this is big stuff. This is about resetting completely the relationship between China and the West, and the idea of them having an integrated economic relationship. It's big.
So, Robin, does it mean that European countries, and actually many other parts of the world, will get behind the U.S. on this?
I've always been suspicious, or I've always doubted that European countries would get behind America on this, for the simple reason that for most Europeans, Russia is the more proximate security threat. China is a distant security threat. So although the Chinese government's been annoying, for example, in creating this 18, now 19+1 arrangement, where a group of EU states, but not all, get to talk about infrastructure projects under the Belt and Road Initiative. That's annoyed Europe. There's been, obviously, intellectual property theft. There's been some state-owned acquisitions of sensitive technology or sensitive companies. There's been an irritant in there, but it has not been strategic. Now, the changing element is human rights. The Xinjiang and Hong Kong, that's what brings Europeans into the mix. They believe they've been defenders of the UN and human rights in a way the Trump administration has not been. So when Trump says human rights, the Europeans have to answer. And this applies for the UK as well. So there's definitely going to be a tightening up of European positions.
Well, the immediate news right now on China, we do this with Robin Niblett of Chatham House. We're going to come back and talk about things more established, including a new Europe. Coming up in the 7 o'clock hour here with futures up 15, Dow futures up 118, NASDAQ futures, all down, I should say. Down 15, down 118, NASDAQ futures at negative 27. Adina Friedman will explain why the market's going down. This is Bloomberg.
inflation goal is symmetric, which means we should overshoot it. We're having a difficult time doing that, like all developed economies. I'm supportive of the idea of letting inflation get above 2% before we take any action with respect to the Fed funds rate.
There are, every morning, just under 1.5 million Americans who go to work for British companies, around the same Brits going to work for American companies. And I think that illustrates the kind of win-win free trade deal that we're committed and determined to achieve between our two countries.
Well, that was the UK Foreign Secretary Dominic Raab speaking in a news conference with the US Secretary of State Mike Pompeo. Still with us is Robin Niblett, Chatham House Director. Robin, how has the government week been? I mean, they've been accused of turning a blind eye to Russian meddling in Brexit. They're still struggling to explain exactly the strategy around COVID-19. And actually, the opposition are doing quite well. What does the Prime Minister do from here?
I think the Prime Minister hopes that Britain isn't one of the countries that has a return spike in COVID in any significant way beyond some of the localized ones we've already had over the coming months, because it is absolutely essential for Boris Johnson that the British economy start to recover. And they're trying to keep that eye on it. Remember, the UK is going to have one of the largest deficits amongst OECD countries this year. Obviously, the US a lot more, but we're talking about maybe 15, 17% deficit to GDP. The highest we had was 10% during the financial crisis. So he desperately needs the country to get back going. I don't think Russia inquiries landed too many blows, simply because there wasn't enough data to really point to here. It's been crimes of omission rather than commission so far. But the visit by Pompeo is probably well-timed, because at least it allows them to show that special relationship, the close connection with the United States, even though I'd say a majority of the British public are a little bit suspicious of getting too close to the Trump administration. But on China right now, and around this issue of Hong Kong in particular for Brits, it's a useful moment, a useful distraction, a bit of theatre to have after a pretty torrid set of weeks in terms of the government's COVID-19 response.
We haven't talked about Brexit much, but are we going to get a Brexit deal, or is the UK just going to leave this year without anything?
If I have to put money on the table, I think a skinny deal, as it's called, will be done by the end of the year. Skinny, I say, because it is, as it is, the UK, by going for the free trade agreement option, was not asking for a big deal. And it's tried to separate out and push off a number of other contentious issues around domestic security and energy and so on for the future. So they're really trying to concentrate all of their effort on tariff-free, quota-free trade and the terms of access for some of their services, especially financial services, to the market. And given that the UK has conceded that there are going to have to be tough border controls, and we're already talking about £7 billion worth of company extra cost to complete 250 million new customs forms. All that stuff happens in January, whether we have a deal or don't have a deal. So my sense is the two sides right now are not going to want to show that they fail on this. Given that the horizons are so low, I think that they will come to some type of agreement. And certainly Boris Johnson has a habit, certainly has form, of doing a lot of tough talk early in order to be able to concede later. And that's how he did it with the withdrawal agreement. And I expect the EU as well will give him some room to be able to compromise.
Robin, was this a watershed this weekend? I mean, all the imagery of all the leaders in Britain wasn't there. Was it really a sea change visual and emotional moment for the United Kingdom to say, we're not part of this?
Sorry, we're not part of what?
The EU. I mean, you know, they weren't there.
Sorry, sorry. I'm sorry, you jumped. No, absolutely, Tom. No, look, it's funny that I didn't even know what you were talking about for a second, because sitting here in London, although I try to follow press more internationally, it's been a parallel story.
Yeah.
So it might be a big issue in Europe. But in a way, both sides are beyond it. We're beyond each other. In fact, I think one of the most interesting things to think about right now is, could you have got this deal if the UK was still a member of the EU.
Interesting.
I mean, this is the classic example that actually the UK almost had to leave because the UK would have been blocking all of these new own resources, borrowing on the market. This just isn't a Eurozone deal. This is an EU-wide deal. And the UK would have been having to concede ideas about future taxation, borrowing on the markets.
Right, right.
This confirms almost for many people why the UK could not still be a member of the EU, and I bet you there's a few EU governments happy not to have the UK around the table.
Always thought-provoking. Robin Niblett, thank you so much with Chatham House right now. Futures negative 13, Dow futures negative 108. We're really watching for news flow out of China, out of Beijing, on their actions after the United States closes a consulate, a Chinese consulate in Houston. Tomorrow, driving the economic dialogue forward, somehow stimulus will come up. Lawrence Kudlow of the White House, the National Economic Council Director, in conversation with John Farrow. This is Bloomberg. Good morning.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This morning, there is a lesser yield. There is no disinflation-adjusted yield. This morning, gold surges up 25% since March pandemic lows. It is a hope. It is a promise as Europe, well, they agree to a united stimulus in Washington. Trillions more in aid will be needed, and it's needed now. And there are 103 days to the election. Yes, we're counting. The president adapts, the president adjusts, as governors migrate from, quote, weak, pathetic jerks and fools to his partners. Good morning, everyone. This is Bloomberg Surveillance from our world headquarters in New York and our world headquarters in London. Francine Lacroix as well. Francine, there's the politics going on of Mr. Pompeo in the United Kingdom and Prime Minister Johnson on China, and then you have the news descend upon them as we see this morning.
Yes, and it's also descending on the markets. If you look at U.S. equity futures are now dropping, Tom, what you're talking about is this flare-up, this dispute between America and China over, a property or intellectual property theft, which means that the U.S. gave very little notice to China to close its Houston consulate, and that's add to concerns about this deteriorating relationship that seems to be deteriorating pretty fast.
Yeah, I love how you say flare-up. I think that absolutely captures the moment. Right now with a news update, our first word news in New York City is Ritika Gupta.
Morning, Tom. Francine. As you were discussing, China calls it an unprecedented escalation. The U.S. has ordered the Chinese consulate in Houston to be closed. According to the State Department, it's to protect American intellectual property and Americans' private information. Beijing has warned that it will retaliate. Last night, Houston firefighters went to the consulate after reports that documents were being burnt in outside containers. President Trump has rebooted the coronavirus briefings with a shift in tone and a warning. He was notably more reserved than in the past. He encouraged Americans to wear masks and avoid risky behavior. The president promised that the virus will be defeated, but he said it probably will get worse before it gets better. Republicans putting together a coronavirus relief plan broadly support the idea of more stimulus checks to individuals, but they're expressing doubts about President Trump's call for a payroll tax cut. The differences between Republican senators and the White House threaten to push any action on the stimulus into next month. And the Democratic Party platform is sticking close to Joe Biden's line on major policies. According to a draft of the document, the party will call for universal health care and remaking the justice system. But the platform stays away from goals pushed by progressive Democrats, such as Medicare for all. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. The churn of equities, bonds, currencies, commodities. I'll get to gold in a moment. Futures at -12, Dow futures -94. The VIX 25.54 really indicates the stability within the markets off of the huge surges of the last few days. 10-year yield 0.5905%. Gold is a huge story now. There are different ways to price it. I'm using the COMEX Gold 1858 an ounce on a weekly basis. That is a record high. Francine?
Yeah, Tom, actually, the yuan weakened on the back of what we saw between America and China, U.S. equity futures dropping. As you're saying, European stocks are also dropping. Now, they're not at session lows, but they're down some 1%. I guess these fresh Chinese-U.S. tensions add to potential risks weighing on investors with global equities sitting near a 5-month high. So we always need to look at the perspective of what we saw in the last couple of months. And then I'm just looking at gold and silver because we don't do it very often. Gold 1,856, so you can see there could be more potential up according to a lot of banks, Tom.
Very good. Joining us now, Gabriela Santos with JP Morgan Asset Management. It's really great to have her here out of Pennsylvania. And of course, I think she speaks 14 languages. Maybe it's only 9. I can't remember right now. Gabriela, you have had the courage to stay in the markets. Part of the game is you have to participate. How do you continue to participate in the international equity markets given this news flow?
Hi, Tom. Thank you. It's good to be with you. Indeed, a principle we used to talk a lot about before COVID, which has been true during COVID as well, is the idea that market timing just absolutely does not work. And that's really because you have some of the best days in the market clustered right around the worst days. Things can turn very, very quickly. And we saw that this year as a perfect example. We had the 4th worst day in 20 years on a Thursday, followed by the 2nd best day in 20 years on a Friday. So it's absolutely paid off to be invested through some of the difficult headlines around the virus, around the economic impact. It's been harder, I think, in international markets just because they have underperformed the U.S. so massively over the past decade.
I don't mean to interrupt, but, you know, your tour of duty with HSBC before JP Morgan on the Pacific Rim, does this news of China, of tit for tat with China, does that change your international view? Does that adjust your Pacific Rim investment stance?
We've actually become a lot more optimistic on international markets. So having said that they've been difficult over the past decade, we're now starting a brand new cycle. And this is absolutely international's time to shine. And I think it's a combination of a few things: better starting valuations for one, but also just a better path in this recovery. And that's absolutely where Asia fits in, especially North Asia. And I would put Europe in this camp as well. A better control of the virus, breaking the link between reopening and reinfections allows a faster recovery. And I think for Asia, investors really have to just take in that these tensions between the U.S. and China are a permanent fixture of the economic and investing landscape. They were here last year, they're here this year, they're going to be here over the next decade, maybe the next century. So we have to learn to invest through it. And Asia remains one of the biggest growth opportunities for us in the COVID world and the post-COVID world.
Gabriela, would this be, and good morning from London, so Asia, the biggest opportunity for you, despite these flaring up of tensions between the U.S. and China?
Yes, and the way we think about it is we do think it'll absolutely stay with us for the next decade. And so when we think about the growth potential in China, we have to factor in that it will have a harder time in its growth path for the next decade than it did the last decade and the decade before that. So we do have to knock off some of the growth expectation as a result of these ongoing tensions. But to us, that still means China can grow at around a 4.5% annualized growth pace. That's still enough to bring about 500 million people into the middle class in China over the next decade. So tremendous growth opportunity for consumption in China going forward. And more because you have this ongoing break in U.S. and China relations. More and more, if you want to access that China growth opportunity, you have to go to China. Chinese companies listed in China, we're seeing a wave of these companies go back and list in China this year as a result of some of that U.S. pressure.
Gabriela, when you look at the market, are we actually due a correction? I don't know if there's anything that looks even like it's in bubble territory, or whether that would be a step too far.
So the biggest candidate that comes to mind would be U.S. equity markets, because you have seen one of the biggest recoveries from the losses in global markets, less so in Europe, less so in some other emerging markets. So the U.S. does come to mind as the prime candidate, especially with valuations sitting over two standard valuations above average. But when we talk about a correction, at this point, we're talking about a normal amount of turbulence in the equity market, which would be about a 10% correction. Unless things change dramatically from here, we're not talking about going back to the level of volatility that we had back in March.
Very good. Gabriela Santos with us with JP Morgan. We're going to continue this discussion, and particularly on the balance between those 14 stocks moving up in the United States and everything else, and particularly those stocks on the international watch. That'll be a theme today with a gentleman from Pershing Square, their founder, their chief executive officer, William Ackman, an exceptionally timely conversation, that in the 1 p.m. hour. This is Bloomberg. Good morning.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, we're having a nice conversation on the markets and some of the opportunities out there with Gabriela Santos, JP Morgan Asset Management Global Market Strategist. Let's now get back to Gabriela. Gabriela, when you look at volatility, how will that perform in the coming months? So I don't know if we're range bound or we're going to be stuck in a certain range, or whether, given the unknowns of COVID and possible lockdowns, we're going to be all over the place.
So the way we see it is we had such wild swings in the markets in the first half of the year on the way down and on the way back up, that at this point we do see the market more range bound in the second half of the year, especially U.S. equity markets that have recovered over 90% of their losses already. That doesn't mean no volatility. So when we do look at the VIX, it's a little bit below 30 now, but that still implies the possibility of daily moves of plus or minus 2%. So you can still have volatility while you may have a sideways range over the next few months. That's where we think actually looking a little bit beneath the actual U.S. equity index overall is actually much more exciting. That's where you might have some bigger moves happen. And I think it's two things, both in terms of sectors as well as regions. Regionally, we do think it makes a lot more sense to be balanced between the U.S. and other regions. We mentioned Asia as well as Europe as two really exciting growth opportunities for us in this new cycle. And in terms of sectors, of course, tech has led the way, and rightfully so when you look at the fundamentals over the past few months. But expectations are already incredibly low for your more cyclical sectors. And as we see this earnings season, it becomes a lot easier to beat those expectations. And then you have a little bit of mean reversion happening in some of your more cyclical sectors, even within the U.S. market. So a lot more action beneath the surface for the next few months.
Gabriella,